All right. Once again, we are live. We are live. We are live. We are live. Hey, good evening, ladies and gentlemen in the free credit repair advice group. My name's Jeremy Deysach. I am a FICO certified credit coach with Credit Life Financial Wellness. I also happen to be the founder of the free credit repair advice group on Facebook, which is kind of fun. And what I'm here for tonight is we are going to be doing our daily Facebook Live. We do this every night at 8 p.m. Eastern, 7 p.m. Central, 6 p.m. Mountain Time, 5 p.m. Pacific Time. So what I'm going to do is I'm going to let the room fill up just a hair, just a little tiny bit here, so that we can get rocking and rolling tonight. But tonight's topic is going to be kind of fun. A lot of people lately I've seen in the group, and this is what brought me to this, a lot of people in the free credit repair advice group have been asking about vehicles. They've been asking about cars. I don't know if it's the excitement that people are seeing with some of the specials that are being had or offered. I mean, I saw, a BMW. You can get a BMW. You don't have to make a payment for the next 6 months on the thing, which is absolutely mind-blowing to me. So here's what I'm going to do. I want to get us live and active. Want this room to fill up. There we go. Perfect. I've got everything set up the way I want it there. Couple quick things. Quick plug. If you would like to hire me, if you'd like to have Jeremy Deysach as your personal credit coach with Credit Life, you can actually book a consult directly with me by going to www.bookcoachjeremy.com. Bookcoachjeremy.com. Bookcoachjeremy.com. And you can set up, I've got daytime appointments, morning, I got afternoon, I've got evening appointments, I've even got some Saturday morning appointment times available for you for a consultation. And I'll do an initial consultation at no cost. There's no cost because, quite frankly, I haven't done anything. What would I be charging you for? And the idea is to see if you're a good fit for the program, to see what service options, what things need to be done to get your credit score and your credit profile in position to qualify for your goals. So if you'd like a 28-year veteran of the credit and banking industry, former CEO of a mortgage corporation, American Institute of Banking certified, FICO certified credit coach, me, if you'd like me as your coach, go to www.bookcoachjeremy.com, or you can click on the link at the top of the description here and book up that consult. I'd love to be your coach. I'd love to be your coach. There's my shameless plug for the evening. You like it? All right, so a lot of people in the free credit repair advice group over this last week, really, I took a look back at some of the posts. A lot of people were talking about vehicles, about cars, about, is this a good time to buy one? I want to get my credit in better shape so I can qualify for a car. I'm paying this for a loan, I'm paying that for a loan, and I think it's too much, or is this too much? What should I do? What should I do? What should I do? We even had a young gal in the group who had just bought a Ford Fusion and was she was young, and it was like a $600 a month payment. She's in a massive payment. She bought it, I believe, October, November of last year. So she hasn't even been in this thing 10 months yet, and she's going, what can I do? Can I refi? Or am I upside down in it? Do I owe more than it's worth? So I thought this would be a great time between that and, hey, with COVID-19, by the way, the dealerships, they're going bonkers. They're like here, just take a car. And they're like trying to get as many of these off the lot as they can because they're suffering. They're suffering because when a third of the people are currently honkered down and not employed, it's hard to sell a lot of cars. Okay, so I wanted to talk about with you guys what kind of credit sense you want to have when it comes to buying a vehicle, when it comes to getting the financing, when it comes to getting a loan for an automobile. So that's what we're talking about tonight. So one of the first things I wanted to show everybody, if I can figure this ding dang thing out, they went ahead and switched up the lives on us so that we've got all kinds of new tools, and it makes it a lot less practical. I don't know how that works. But basically, I've got, if you look in the files section of the group, if you are on a computer, it's right at the top. If you're on a cell phone, it's at the top, and you might have to slide over. Once you go to the files section, and I put a new article about interest rate comparisons on cars. So what I did was I show you this side-by-side comparison of buying a car with good credit and buying a car with bad credit. And it's funny, I asked the question in the group, hey, would you spend $135 for 6 to 7 months if it meant you could have a house at the end of it? And some people are like, no, that's too expensive. That's too expensive. Well, let's use a car. Let's not even use the house. Let's use the car as an example. And I said, do you know how much you're spending now with bad credit? And that one person said, I know exactly how much. It's like, well, clearly you don't. You wouldn't have said it was too expensive. So we're going to do a side-by-side comparison. We're going to talk about two cars. Two people, two cars. So John has a 550 credit score, needs a new car, wants to get a new car, he's going out and going to give himself a Honda, right? John's going to get an auto loan of $25,000, a 5-year auto loan, $25,000. John's going to qualify for, with that score right now, an interest rate of 18%. Why? Because his credit sucks. It's in bad shape. It's at a 550. There's a reason they call it poor. It's not fair. It's not good. It's poor. So John's buying a Honda. He's getting it for, you're putting a $25,000 loan together on it. It's going to be a 5-year term, 18% interest. Now we got Bill over here. Bill's got good credit. Bill was where John was 6 months ago with a 550. Bill's now at a 700 because Bill investigated with the bureaus. Bill then did settlement on outstanding debts. Bill did 1 to 3% balance to limit ratios on Bill's credit cards. Bill got smart. Bill paid attention in the group. Maybe Bill hired a credit pro, okay? Bill goes in and is looking at another Honda. Same dealership, same car. $25,000 loan, right? Just like John. 5-year term. Hey, Jenny, good to see you. 5-year term, just like John. But because his interest rate's a 700 versus a 550, which is totally achievable in a 6 to 7 month time frame for most people on average. Asterisk. Your mileage may vary. You actually have to do things like, if you're told to do something, actually follow through with it. I mean, you got skin in the game, ladies and gentlemen. But John, John, $25,000 loan, 5-year term, he's getting 18% interest on it because he's at a 550 credit score. While Bill fixed his credit. Bill repaired his credit. Maybe he did it himself. Maybe he bought the Credit Flood at www.creditflood.com. If you don't know what that is, check it out. Maybe he hired a professional FICO certified credit coach who's incredibly attractive and exceedingly modest and talking to you right now. But he got a $25,000 loan, 5-year term. Right now, the going rate at a 700, it's 2.99% interest. So John's got 18% interest at a 550. Bill's, hey, good to see you. So John's got 18% interest at a 550 credit score. Bill spent a little money and took a little time and got his credit in good shape. He's getting a 2.99. Same car, same length of time that they'll be paying on it. Same loan amount, 25 grand, right? John, who's got that 18%, his payment on that Honda is $635. Bill, same car, same loan amount, because he got to a 700 credit score, his payment is $448. That's $187 cheaper per month because Bill fixed his credit. He did it himself, or he spent $135 with Credit Life and hired Credit Life, $135 a month, and had them fix it for him so it went even faster. And because of that, he's going to save $187 from what he would have spent. And he's going to save that 60 times. That's how many months there are in 5 years. 60 months in 5 years. So the total savings, the total difference between having a credit score at 550 and a credit score at 700. Still a $25,000 loan, a 5-year term, 18% interest when you are at 550, 2.99 when you're at 700. $187 savings. The overall savings that Bill is going to save in over this 5-year term is $11,220. $11,220, or over $2,200 a year. Now, I want anyone who was in that thread earlier that goes, I don't know, $135 to fix my credit, that's too expensive. I sure the hell hope you've got a 700 FICO score. Because if you don't, it's a whole lot more expensive. A whole lot more expensive not to have good credit. So auto loan buying, step one, get your credit in shape. Get your credit in shape. You want to have good credit going in. You do. You want to have good credit. Now, there's a lot of car buying tips I could give you, like you'll more likely get financed on a new versus a used. Why? Because it's covered by warranty longer. They think you won't abandon it and stuff like that. Here, let me do this. Get the sparkly off. See? This is what happens when I leave the auto. Ready? Like my hand? The autofocus. Yeah, screw it. You guys can hear what I'm saying. So anyway, it's easier to get financed for new versus used. Why? Because the collateral is better. A lot of people say, by the way, when you're going to go for a car loan, go to your credit union. Go in with a check in hand. Go to your credit union. How many of you have heard that? Get your bank ahead of time. Get that ahead of time. Go in. Absolutely bupkis. Okay? The dealerships oftentimes have these financing incentives that if you finance through them, it'll actually reduce the overall cost of your car. So you could go after that Honda we were talking about, and you could get a $25,000 loan through Honda Finance or a $25,000 loan through your bank, and they may throw in an incentive and take $1,000 off the price of the car because you went through Honda. So that's okay. The other thing to keep in mind, a lot of people get worried about going to a car dealership. Because car dealerships, the finance department will do something called shotgunning your credit. How many of you out there, have gone to an auto dealership and you gave them your information, they're going to check on financing, and the next thing you know, you've got 25 credit inquiries? Give me some thumbs up in the group, or give me some number ones in chat if that's happened to you. If you've gone to a dealership and you're like, yeah, here's my info, and pretty soon it's like, you're just blasted, shotgun, peppered with inquiries. How many of you has that happened to? It's happened to me. I one time went to the dealership and they did 45 inquiries on me spread over the 3 bureaus. Robin has had that happen. Absolutely, yeah. So give me some number ones in chat. Give me some thumbs up if that's happened to you. But here's the deal. Absolutely. Thanks, Ashley. A few years ago, they passed a law that you don't need to know the name of, but it's funny. It's a funny name. It's called anti-duo-duping, okay? What that actually means is you are allowed unlimited automotive inquiries as long as they're within a 30-day shopping window. After the end of that 30-day window, it's only going to count as 1 on Equifax, 1 on Experian, 1 on TransUnion. So what used to be bad, they'd shoot it everywhere and tank your score. That used to be bad. Now it's good. Why don't you want offers from 45 places? I want 45 people competing for my business because I'm going to get the best damn deal possible. Okay, so that's what's going on with that now. So the old worry about, oh no, they're going to send my credit out and they're going to shop it 25 different times. It's fine. You have a shopping window. Amber says, they are pushing us to get a car loan to build our profile. I don't want to. I just opened a self-lender account instead. Will this be like the same thing? Yes. They are both installment loans. Now, a car loan will give you a little bit more oomph, but not a ton more oomph. They're both installment loans. They're both equal monthly installment payments until the debt is paid off. You're showing a willingness and an ability to repay in a timely fashion. I like what you're doing there. And Amber, if you're wanting to get one that's bigger, Credit Strong, one of the self-lenders, Credit Strong, you can get at it on the installment section of my800credit.com. That's, by the way, if you're looking for accounts to build your credit, go to my800, the number, credit. So like, I want 800 credit, so we'll go see my 800 credit. my800credit.com. That's the website. It's just a website that hosts all of the vetted links that Credit Life has said these are good. We checked out, they're hosting all in one place. Now I'm sure they're making money on click-throughs or something. Bless their hearts, that's fine. I don't mind. Good for them. That's not the point. The point is we've got a safe place where we know we got the right accounts that we're suggesting, and you got the good links. But if you go into Credit Strong, they got a great big one where you can actually save a lot of money up. So you could literally start putting away the type of money that's a car payment into one of those suckers. But what you're doing, instead of just depreciating it with the vehicle, you're tucking it away for a rainy day. Hell, you can put a big down payment on your next vehicle. Yeah, I think you're good. Luckily, they only pulled it 3 times. Yeah, a lot of people have had that experience. Look at that, all the thumbs up, all the ones in there. Amazing. Jamie said, I'm glad you said that everyone's big on financing through a credit union ahead of time. It may not be the best way all the time. Jamie, I am telling you, right now with the COVID thing, going to the bank, it's the worst idea. The banks are doing something called a flight to quality. A flight to quality. That's banker-ese. Banker language for, hi, we're not going to make anything remotely risky as far as financing for quite some time. Take example, Wells Fargo Bank. Wells Fargo has stopped doing home equity loans. I believe it was Chase. It's either Chase or Bank of America. I apologize for getting the two right now. But they are doing loans for $700 and up, and they want 20% down for mortgages. I mean, my God, basically they want to give a loan to a person who doesn't need a loan. That's what it comes down to. All right? And so right now, you've got car dealerships where these guys are about to start eating like bowls of sawdust because they can't afford food anymore because they haven't sold any cars in 4 months because everybody doesn't want to get a virus, okay? So you've got all of these absolutely starving car dealerships, starving car salespeople, and starving automotive finance departments. And my God, are they doing incentives? I saw where I could pick up a Maserati and not make any payments for 12 months. Now, obviously, the temptation might be buy the Maserati, don't make payments for 12 months, and when you have to do it, let them repo it. That's cool if you don't care about your credit ever. I'm definitely not suggesting that. But the point is, you could have a $100,000 sports car, and you don't have to make a payment for a year. Wrap your head around that for a minute. How about BMW? You can get a BMW right now. You don't have to make a payment for 6 months. Wrap your head around that. And by the way, the big fancy cars, they're not the only ones doing it. What if you want a Ford? What if you want a Honda? What if you want a Toyota? What if you want a Chevy? Guess what? They're doing it too. So right now you've got this perfect storm of cars are dropping in value so fast because there's a ton of inventory and there's nobody buying it. The finance department's starving. The dealership itself is starving. That salesman is dying. He wants to make a sale. She wants to make a sale. So you go in and go, I'm looking to buy a new car. I'm looking to finance it through you guys. I want the damned best offers you have. And let them shotgun you. Remember, you have a shopping window. Unlimited inquiries in a 30-day period. It's perfectly fine. They only count as one per bureau afterward. Now, this doesn't change one thing that I just talked about before and went into. Remember Bill? Remember John? John's got a FICO score of 550. Bill took some time, maybe spent some money, and improved his credit. He's got a FICO score of 700. That could be a 6-month difference. That's it. With Credit Life, we average 6 to 7 months, and people are getting houses. 90% of the people who work with Credit Life, their goal is to buy a house. And we average 6 to 7 months. So forget car, man. We're getting you a house. But let's go back. So maybe Bill spent $135 a month on Credit Life and got his score up. Okay, maybe he spent a total over 6 months of what? I don't know, $780 or something like that on the monthlies. So John has a 550. John's qualifying for an 18% interest rate. Bill has a 700. Bill's qualifying for a 2.99% interest rate. Those are based on today's rates. They're both getting a $25,000 loan. They're both buying the exact same Honda. They are both, and if you want to see this example, by the way, I have it up in the files section as my article for today. It's also in the announcements section of the Free Credit Repair Advice Group. But, John's getting a $25,000 loan. Bill's getting a $25,000 loan. John's buying a Honda. Bill's buying a Honda. John's getting a 5-year loan term, 60 months. Bill's getting a 5-year loan term, 60 months. John left his credit at the 550. He wants to hurry up and get the car. He's getting 18% interest. Bill spent a little money or took some time. He's got a 700 credit score. He's getting 2.99 interest. John's monthly payment on that car is $635. Bill's monthly payment, because he took some care on his credit, is $448. Bill is paying $187 less each and every month, paying $187 less than John. Credit Life's $135 a month. Oh, yeah, do the math, guys. Or putting it in your own pocket and doing it yourself, or doing the flood, or just hammering it out and just working on your own credit. I don't care where you do it. I'm just saying do it, okay? $187 a month. 5 years is 60 months. 5 times 187. Bill saved $11,220 in 5 years on the same car, on the same loan amount, because he took a little bit of time and worked on his credit, or maybe he hired Credit Life. He saved over $2,200 a year because he took a little time, worked on his credit, or maybe he hired Credit Life. Does this make sense? Yeah, Jamie, absolutely. Can you give some tips about refining a vehicle if you're upside down? What would be the best way to go about it? Oh, that's a great question. Okay, so there are some companies out there that will refinance you in your vehicle, even if you're upside down. What does upside down mean? Upside down in a vehicle means negative equity. Negative equity means you owe more than the car is worth. This leaves us a few options. We can make a lump sum payment and pay the car down. Now we don't have negative equity. Or we can make a little bit of extra payment each month and rapidly get it down so that we beat it and we no longer have negative equity. Or some finance companies, Capital One is one of them that'll often do this, they will finance like when it's 110% of the vehicle's value. Okay, so they'll let like 10% negative equity happen, 10% upside down happen. Okay, that's another option. Another option is, quite frankly, and this isn't a bad option, I've done it, is to take that negative equity vehicle. Right now, with the fact that these guys are doing backflips and whatever they're showing off, they're doing whatever they have to do to sell a car. You can take that to a dealership as a trade-in, and let's say the car is worth $7. And you owe $9. You can roll $2,000 into that new vehicle. Well, is that a bad idea? To roll that into that new loan? Because what I mean by roll it into the new loan is they'll make the loan for the car and then add $2,000 to it to pay off the difference. Well, I'll tell you what, if they're willing to go no payments for 6 months, there you go. It's a wash. It's even. So you got a couple options. You can try to find someone who will refinance you. The only ones who will ever typically touch upside down cars are credit unions or Capital One Auto Finance. Otherwise, you can trade it in and roll that negative equity into a new loan, and then you're driving a car that has a warranty and it's safe and it's new, and you might have a lower interest rate right now because they're starving. You might have some amazing incentives right now because they're starving. My negative equity car I got a better car when I traded that in, rolled the negative equity into it. Because of the incentives and the interest rate I got on the new one, my payment actually went down. Good deal. That's what I got for you right now. Here, Mindy says, yep, they knocked $5,000 off our van to get the sale because we didn't want to go over 20. Perfect. Donnie says, I traded cars on February 13th. Dealership didn't pay the loan off till April 3rd. You're going to call them up and you're going to threaten to sue them until frickin' the cows come home, man. That's all on them. That's all on them. I would tell them that you'd like them to pay for credit repair. Then have them hire Credit Life. Bring the ninjas on board. But yeah, this is bad. This is very, very bad. You got to go after the dealership. Tell them, look, nothing personal, guys, but I will call the Department of Commerce. I will call the Consumer Financial Protection Agency or Protection Bureau. Yeah, that's bad juju. They can't play that game. Brandy says, just started with Credit Life. Do you recommend getting a car loan or wait? I don't know. I want to look at your credit. It's going to be specific to you. If I'm talking that specific to an actual client, we want to look at your credit. Will a cash purchase get me a better deal? Zambia says. Actually, no. Typically, a cash purchase will get you a worse deal. There's a reason. All of these auto finance companies, Ford Credit, Chrysler Capital, even Wells Fargo Automotive, Honda Finance, all these companies that do automotive financing, a lot of them will offer incentives to the dealership, to you. So if you're going to buy this, and like we're going to go back to John and Bill. John and Bill are buying the car, $25,000. Well, remember, Bill's getting a 2.99 interest rate because he's got really good credit. He's got 700 credit score. This is the type of guy who's going to qualify for incentives. Maybe he was going to go with his credit union at 299, but in this situation, he went into the dealership and they said, "Look, not only can we match that, but we'll give you $1,000 off, loyalty, consumer loyalty, because this is your second Honda," or things like that. So you actually will typically get a better deal. I'm talking at a large dealership. Smaller dealerships where it's wheelie dealy, I always say do cash. But a major dealership, a brand name dealership, you're going to get better deals when you finance. You are. My father went in and did one. He financed it to get he got several $1,000s off this car. And he was going to buy a car with cash. But he financed it because they had all these freaking incentives, like thousands and thousands of dollars. And then when his first bill came, he wrote a check for the full amount, and that was it. And he got it all. Good question, though. Jacob says, I'm in a situation now. I'm upside down, need a new vehicle. I know some dealerships are giving some good deals, paying twice what the vehicle's worth. First responders. Oh, yeah. Yeah, do it, man. You know what? It's not going to hurt you to check. It's not going to hurt you to check. It's not going to hurt you to shop. Not going to hurt you to check. Not going to hurt you to look into it. What if my credit score is low right now? I'm in the middle of credit flood, working on increasing my score. I would hold off. Matt, remember, we're doing that side-by-side comparison. John is at 550 and Bill is at 700. And the only difference is he did a few months of credit repair, a couple months of credit repair. John's at a 550. He wanted the car right away. He didn't want to wait. Bill waited. Maybe he hired Credit Life. Maybe he did the flood and did credit repair himself and raising it, okay? So John's at 550 credit score. Bill is at 700 credit score. They take a $25,000 loan. They both take a 5-year loan. They both buy the same car. But Bill's getting 2.99. John's getting 18. So John's got 60 payments of $635 while Bill has 60 payments of $448. $187 a month less. Bill, by doing a little legwork, showing some patience, maybe getting creative, maybe bumming a ride for a bit, or even renting a car for a month or something, or buying a cheap clunker because he didn't care because he knew he was going to get good wheels real soon. He saved $11,220 on the exact same car. Hope that answers the question. You're welcome, Jacob. So that's it. I wanted to talk about cars. Cars isn't something I usually talk about because I nothing. If people are like, I'm a car guy, the car part of the car part of lending and the car part of credit bores the crap out of me. It does. You guys know I'm real direct and blunt. If you ever watched any of my videos, you know I'm like stupidly direct and blunt. But you can't ignore that just doing some basic credit repair is going to save $187 a month for 5 years. If you can ignore that, man, I got no sympathy for you. Seriously, you shouldn't be allowed in public. You're a danger to yourself and others. Awesome. Hey, Titan says, me and my wife's goal is to buy a house in January. Awesome goal. We've been in Credit Life since January. Both our scores have jumped. Since then, question is, should my wife wait? Until after the house to get a car loan? Matt, if you can wait, do wait. If you can wait, do wait. When you want to buy a house, if you can wait, do wait. Okay? Why? That new car payment is going to be factored into your debt to income ratio when the underwriters look at it. And if you're paying maybe $300 on a car right now, but you're going to get some new wheels, it's going to be $600. That's $300 worth of house they can't consider you for. That's house payment. All right? So if you can wait, do wait. Now, if it's about getting a safe ride for the kids, if it's about a minivan, if it's about you just had a baby, and man, there just are not enough seats in this damn thing. If it's about you're afraid your kid's going to get in, and because the rust is through the floor, they're going to be doing like Flintstones with their legs to make the car go. Yeah, then get some wheels, okay? If they're offering a deal that's just so bombastic, just so freaking amazing right now with the COVID thing, then it might be worth it. But you have to know this. You have to know that if we are looking to buy a house, we don't want to do anything to jeopardize us getting the size of house we want, the amount of house we want, the kind of house we want. And if it means waiting 6 months for a car, it means waiting 6 months for a car. Also, I specifically recommend going over that with a coach. There we go. Mindy says we had to buy our van in a rush because we got emergency custody. By the way, when I just said you suddenly don't have seats and got to have wheels, Mindy. All right, we had to buy our van in a rush because we got emergency custody of my sister's kids that went from 3 to 6. Wowza! We got 14% interest. Been working on our credit. Got from low 5s to 605. How long should we wait to shop for a refi? It's not going to hurt you to reach out to someone like Cap One right now, Capital One Auto Finance. If you are a member, like a long-time member of a decent credit union or a decent bank, I'd check out them too. It's a tough time with the flight to quality on the lending, but it's 100 points difference. They may be able to offer you some stuff, even if you have to do it in baby steps. As long as there isn't big closing costs on the refi, if they'll just lower the rate and do it, well, then it makes sense. But I'd look at like a Cap One Auto Finance. They're people who will work with stuff like that a lot of times. If I consolidate my 10 student loan accounts, what it'll do to the late payments on each account, it'll make them a lot easier to get deleted, is what it'll do, in my experience, over hundreds of thousands of credit reports I've looked at. If you consolidate them, what happens is you consolidate them, it goes to a new lender, new service, or a new plan. Now those old ones that reported the lates, they no longer have skin in the, they no longer have skin in the game. They no longer have money to be made off of, verifying and validating those lates. So when you consolidate them, when you take their skin out of the game, it gets a lot easier to have them deleted. Yeah, that's what it'll do. They're not going to just go away. I mean, that'd be wicked if they did, but that's not what happens. So what does happen is it opens up an avenue for you to do investigations, or for your credit coach to do investigations, and have a much cleaner shot at getting rid of those lates. All right, I'm going to throw in a personal plug again. If y'all would like to have a professional credit coach, my name is Jeremy Deysach. I'm a FICO certified credit coach with Credit Life Financial Wellness, the founder of the Free Credit Repair Advice Group. I'm the former CEO of a mortgage corporation. I've been in credit banking, the legal side of things, foreclosure mitigation, all of that for the last 28 years. And I'll tell you what, you can go to www.bookcoachjeremy.com and you can pick a day, an evening, or even a weekend, like Saturday morning, for an initial consultation. Now, there's no cost for the consult because it's to see if you're a fit for the program. During a consult, we'll talk about your credit. We'll talk about your goals. We'll put together a plan, a set of steps, and figure out some action items and what services might be needed to get your score and profile in position to qualify for all the credit and finance goals you've got. So go to www.bookcoachjeremy.com. I'd love to be your coach. All right. Oh, you're welcome, and you're welcome. Oh, that's awesome. All right, guys, what I'm going to do is I'm going to wrap it up because I have gone like 2 multiple long days in a row. I think I'm on 12 hours today without a break, and I went 15 yesterday. So I'm going to take this chance to wrap it up. I'm going to throw a watch party on afterwards. I'm going to put on this video. Maybe I'll put on my video where I talk completely about how to do your credit, like how to fix it from top to bottom. I'll put on stuff about the credit flood. If you guys are interested, I'll throw a video on the credit flood there too for you. But I want you guys to tune in every single evening at 8 p.m. Eastern, 7 p.m. Central, 6 p.m. Mountain Time, and 5 p.m. Pacific Time, Monday through Friday, a different coach each night for the Daily Credit Report, sponsored by and powered by Credit Life. On Fridays, we do watch parties. We do greatest hits. We do all kinds of stuff. This Friday, we got something really bizarre planned. Pay attention to the group over the next couple days. We got some. You might want to keep your Friday night free. I got something really bizarre planned with the guys. It's gonna be kind of fun. But for Credit Life, how soon can you book me? I don't know. It's gonna depend on what's. I haven't even seen my calendar. Just take the first available, and I don't know. We'll get you rocking, Deandra. Yeah, just book CoachJeremy.com, and I've got no idea what my availability looks like. I'm like, when it comes to your credit, by the way, I'm extreme details. When it comes to real life, I'm more of a general ideas guy. So I know I'm supposed to be somewhere at a time, but I usually don't know where, and I usually don't know when. Because I hyper focus on your success. I mean, I know that sounds cheesy, but it's also the truth. So for Credit Life, for the free credit repair advice group, I'm Jeremy Deysach, credit coach. Thanks a lot for joining us. I'll talk to you soon. Stay safe, social distance, and don't lick doorknobs. Bye-bye.